Soundhound AI has had quite the start of the year. At one point, the stock was up over 300%, but since then, the stock has been slashed in half. So what exactly has happened? Why is the sentiment right now down for Soundhound AI? Let's talk about that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, we're well on our way to reach 40,000 subscribers. So I appreciate all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So Soundhound AI, one share will cost you now pre-market under $5, has a market cap of just around $1.55 billion. Now, year to date, it's still up 135%, but in my opinion, valuation still does not make a lot of sense. EV to sales ratio in the next 12 months, 22.4 times. Now, of course, as you can clearly see here, it has come down. Previously at its peak at around $9 to $10 or so, it was trading closer to 40 times. Back then, I told you already, this did not make a lot of sense. Some people were even making some projections of it trading at 60 times. I mean, realistically speaking, that shouldn't really be in a discussion here. Now, I do want to say that the expectations for Soundhound AI are quite high, right? We've seen the growth rates for the quarter. If you don't remember, we're going to have a look at that in just a second. But right here, the analyst expectations for fiscal year 2024, sales growth of 51% year over year. And then fiscal year 2025, another 47.8% year over year growth, while of course still remaining unprofitable. The current average analyst price target still sits at $7.15, representing 43% upside from the price we're at today. Earnings report will happen on May 10th, one day before my 30th birthday. Now, last quarter was a good quarter for the company. Revenue increased 80% year over year and adjusted EBITDA improved by 80% year over year as well. As you can see right here, some nice increases year over year, top and bottom line, even though, like I said, still unprofitable. But you can clearly see that operating expenses, total operating expenses have improved year over year. Operating loss, net loss as well, still losing quite a lot of money. And that's one thing that you have to keep an eye on because, well, the cash pile is not getting bigger and bigger. It's getting smaller and smaller. And so in high interest rates environment, these types of companies tend to do, well, not that great. You're unprofitable, interest rates might remain higher for longer, you might have to tap into the capital market, it's going to cost you some money and investors will get diluted. Not great. Of course, still growing fast, top line is increasing, losses are decreasing, so that's great, but currently they're on track to probably raise some money and you as a shareholder will get diluted as a result. Now, I've previously talked about this metric here. I still think it's quite important that we get way more information in the coming quarters, maybe in the calls as well, because combined cumulative subscriptions and bookings backlog of $661 million, representing a 2x increase year over year, is very misleading. This is an updated metric, right? They've added subscriptions here. And if you scroll all the way down to the explanations here, it says, subscriptions backlog refers to potential revenue achievable for the company with current customers where the company is the leading or exclusive provider and assuming a 4-year ramp-up during which time our technologies are being implemented and assuming a successful full rollout of our technologies over a total 5-year duration, which in my opinion is a very misleading metric. I mean, potential revenue achievable? What if it is not achieved? Then those numbers are just wishful thinking. And we've talked about those issues already in the last video, talking about the short report, the good and the bad points in that short report, right? It's not the only thing that raises an orange or a red flag. Because remember, they talked about using loss contracts to inflate revenue and margins. While Soundhound's business has deteriorated, the company has used one-time contract modification payments to inflate their revenue and margins. Customers paid Soundhound to get out of their contracts. Soundhound then used those one-time payments to not only hide Soundhound's deteriorating fundamentals, but even inflate revenue and margins by recording contract modification payments as normal product income. This is not Capybara saying this, this is in their own 10Q. When Soundhound lost Mercedes as a customer, they received payment for the contract modification. Soundhound recorded the contract modification payment as product royalties, which made the company appear healthier than it actually was. Since Soundhound recorded the contract modification payment as product revenue, it has inflated the company's gross margin. According to Soundhound's accounting, the more customers they lose, the better their margins. Again, this is not me saying this is not Capybara's short report saying this is Soundhound's own filings saying this. So again, that's why I say it's great to see some positive momentum, right? An investment by NVIDIA, even though NVIDIA invested already a couple of years ago as well. And NVIDIA is investing in plenty of small AI types of companies. But we need to see continued execution, because if the reports are 100% correct or 110% correct, and the revenue increase, the margins increase because of losing clients, well, that's not really a good investment thesis, is it? The subscription backlog, right? That metric. Also, can we get a bit more information about that? Can we get different metrics as well that we can follow? Different metrics, customers, like they've showed us years ago? Because at the end of the day, you're making an investment in a company, yet the company continues to change metrics or remove metrics from its reports. And so you as an investor always get less and less valuable information. It might be great for trades, but for a long-term investor, it makes it very, very difficult to keep track. Now, more recently, they made this announcement, first for Japan, as Soundhound's AI voice assistant with integrated ChatGPT launches in Stellantis DS Automobile. Now, again, using the word ChatGPT here as a sort of marketing push. Okay, we've talked about that in the past as well. So they say here, the most sophisticated voice AI assistant available today is their own, so the Soundhound Chat AI. It can respond to a vast range of questions from hundreds of real-time domains, as well as large language models like ChatGPT. Now, okay, this is great. They've partnered up with quite a lot of automotive companies, restaurants as well. Total addressable market is huge. They even say it's here. Soundhound AI continues to expand its existing customer base, which has attracted over 20 car brands in just 7 years. These brands represent over 25% of the automotive industry. Of course, over the last 7 years, they probably also lost a couple of those, and that's not included in that sentence here. Now, going back to this Soundhound Chat AI announcements here, the question a lot of people are asking right now is, are you going to tell me that Soundhound has better tech than the likes of Apple, Microsoft, Google, NVIDIA, etc.? How come they can figure this out and all the other big tech companies cannot figure it out? Well, the answer here is pretty simple. I don't think the tech here is so remarkable. I think it's a commodity, just like every other chatbot out there, right? How many LLMs, how many chatbots already exist today? Plenty of chatbots, LLMs already exist today. Of course, it's all about the data. Is your data better than the other? Yes or no? But Soundhound doesn't have the data. They use LLMs like ChatGPT, probably Llama and others as well. But of course, then you have to think about first mover advantage, the ecosystem, how many clients can you attract, which clients are going to integrate your solutions first over a competitor, etc. That's true. We've talked about Pillar 1, Pillar 2. We've talked about the restaurants. We've talked about the recent acquisition, right? Sync 3. How many new customers will that bring in? Can they expand on the offering, etc. So yes, there's probably going to be some tailwinds with regards to that. And so right now, looking at the graph, we are under $5 at the time of making this video. Should be some support at around $4. Will we go there? I don't know, but currently the momentum is definitely not positive. RSI is getting a bit more neutral-ish, but still nowhere near being low. Overall, we're now 4 weeks in the red on the weekly. If we go and look at the daily, we can see that we're very, very close to the 50-day moving average at $5.07. The 200-day moving average sits at $3.41, and the 20-day one sits at $5.81. So overall, to conclude, currently the momentum is definitely not with the stock anymore. There is maybe some AI fatigue in the markets right now, but especially with regards to unprofitable companies, now that maybe there is some fears that we're not going to cut rates as many times as we previously thought. Interest rates are probably going to stay higher for longer, and so it hurts companies like Soundhound AI. Plus, you have lots of question marks, lots of uncertainties with regards to this business model or this business particularly. Growth rates, profitability, is this right? Do they have some proprietary tech that is much better than the others, etc., etc. Hopefully we'll get more answers in the coming weeks. So overall, that's about it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.